For those of you who I have not yet met, my name is David Sung, and I'm the president of Nicola Wealth Management. Now, as I was preparing for this evening's presentation, I thought we'd do a quick stock market reality check. That was my idea. And I was thinking back to a commercial I saw about 10 years ago in which a financial advisor was presenting to his client all these endless charts and graphs, mutual funds, stock markets, and the client, he had his head in a vice. And every chart and every graph that came up, he was turning the vice on himself, and it was getting tighter and tighter and tighter. So at the risk of doing just exactly that, I'm going to present to you what our take is on the markets over the past 10 years. What you're looking at here is the Dow Jones. This is the Dow Jones last year, 2009. An 18% healthy return from January 1st to December 31st. Not bad, a double-digit return. However, from the March 9th low to December 31st, the Dow Jones returned an astonishing 60%. Not bad at all. So is it good times again? Is the stock market going to keep rolling for the next few years? I'm sure you can sense the sarcasm in my voice already. And I'm sure if you've seen our newsletters over the past short while, and I'm sure many other headlines, you've heard the phrase, the lost decade. This is the Dow Jones over the past 10 years. From January 1st, 2000, when the Dow was at 11,500, all the way to, including the March 9th low, to the end of the year, the Dow finished at 10,624. Basically, over the past 10 years, you've gone nowhere in the markets. Now, whether that's the Dow Jones or just about every other major stock market in the world, if you're an investor that's followed a traditional investment model, you've made no money. Let's zoom out and look at the even bigger picture. This is the Dow Jones since its inception in 1896. And here we are 100 years later. During this phase of time, and prior to the last 10 years, there's been 3 other significant points in time when the market has traded absolutely sideways. So what do I mean by that? Well, that means in 1966, if you had bought Coke, Ford, GM, Pepsi, Xerox, IBM, all the big blue stocks, and you held those until 1982, 17 years later, you basically made no money. We're currently into a sideways trading market where we're in it for 10 years. And prior to this current cycle, the 3 previous cycles averaged 15 years. So is it all doom and gloom? Well, not exactly. We actually think that this type of market represents a great opportunity for really astute, active portfolio management. Now, in these types of sideways trading markets, whether it's the current one we're in or any of the other ones, they've all exhibited a very similar pattern, volatility. What you're looking at here is the past 12 years dating back to 1998 and long-term capital management. The long-term capital management was a hedge fund that basically imploded, and it required the governments and other financial institutions to inject cash to basically prevent a financial crisis. Since that time, we've seen a 60% rally, followed by a 50% sell-off, followed by a 100% rally, a 60% sell-off, and a 70% rally. Hindsight's 2020. Wouldn't it be great to go back and time those dips? But I think in the absence of an investment crystal ball, what it requires in order to be successful in these types of volatile markets is critical thinking. Now, critical thinking not just with respect to investments, but critical thinking as it relates to all of our overall investment and financial plans. James Montier. James Montier is considered one of the top strategists over the past 10 years. He manages billions of investment dollars on behalf of the global investment firm GMO. He said with respect to critical thinking is really all about being contrarian in thought. Learning to be skeptical, learning to question what you hear, learning to evaluate things based on merit rather than emotional appeal. Critical thinking is at the heart of what we do at Nicola Wealth Management. Just take the simple example of RSPs. RSPs are considered to be the bedrock of savings and retirement planning vehicles for Canadians. Whereas I know most of you, as our clients know, we have been saying that RSPs make no sense for a good number of you from a tax planning point of view. Being contrarian in thought requires courage. Renowned American investor Michael Steinhardt said, "The hardest thing over the years has been having the courage to go against the dominant wisdom of the time, to have a view that is at variance with the present consensus, and then to bet that view." Now, that's something that we've been doing for a long time for our clients. Just take a look at the past 2 years. In 2008, the stock market experienced the worst return since the crash of 1929. And despite the run-up in the market last year, in 2009, most investors are still far underwater where they were during the previous 2 years. Not our clients. Our clients are ahead. And in fact, our client results over the past 2 years put our results in the top 3% of investment managers across Canada. But that's just 2 years. That's a short period of time. I think what's more important is the long-term picture. And let's take a look at the lost decade. Over the past 10 years, our clients are 52% further ahead than other balanced investment approaches as measured by the Globe Peer Index. Or put another way, our clients have compounded their money at 4.3% per year higher. Or put one other way, starting with $1 million 10 years ago, our clients are over $650,000 further ahead. Now, that's not a small sum of money. Benjamin Graham. Benjamin Graham, I'm sure many of you have heard his name before. He's considered the father of value investing, and he was the mentor to Warren Buffett. Here's what he had to say. If you believe that the value approach is inherently sound, then devote yourself to that principle. Stick to it. Don't be led astray by Wall Street's fashions, illusions, and its constant chase after the fast dollar. Let me emphasize, he said, it does not take a genius to be a successful value analyst. What it needs is, first, reasonably good intelligence. Second, sound principles of operation. And third, and most importantly, firmness of character. We hope these characteristics are why you've chosen to work with us and why you're here this evening. So with that, let me introduce this evening's two presenters. We're going to start with Rob Adel, our Chief Investment Officer. Rob will be followed by John Nicola, our CEO.